Okay, let's see if we can cover FORG before my kids arrive home. So, let's see. FORG. Profile. The company is a licensor of intellectual property and a provider of scheduling and asset management software solutions that enable organizations to schedule and manage their office environment effectively and efficiently. The market cap is just 40 million, so a very small company. Keep that in mind. Technical analysis. Okay, here's the all history chart. It's been down a lot over the years. Nothing unusual. The medium term chart, we can see the medium term trend is bearish, is descending, but perhaps there's still some more room to grow here, perhaps to $3. The volume has been extremely high, the highest in the company's history. So perhaps there's some more room for this rally to continue, but longer term, there's a lot of resistance here around 3. We have this, and it will be hard to go up above $3. The short-term chart. This is an amazing bull run. Just in December, the stock is up more than 300%. It was a fantastic catch here, but now not so much room now. Let's check the fundamentals. Okay, now first the technical overview. Long and medium term trends are negative. The short term trend is extremely powerful with the highest volume on the stock's history. The stock was up 344% from bottom to top in December alone. Now the fundamentals, but first some news. FORG news. I've been reading. I'm not going to open this now, or it would take a lot of time, but I've read the results for fiscal. They were out in December 8th. That was right about when the rally started. This explains the recent rally, this month's rally. FORG meets Nasdaq global market listings requirements because it is above 1 now. We have these forms 4 from insiders. They've been selling stock on this rally. Okay. We also have this FORG announces DVR patent lawsuit update. This is we'll talk about this later on the analysis. Okay, fundamental. We have here is the number of shares outstanding. Historical has been kind of stable. That's surprising. So the stock didn't went down just because of a share count increase. The market cap has been down over the years. On a quarterly basis, we have shares outstanding, not pretty stable. So let's move on. The current ratio, not as good as it was before, but still at 3. That's healthy. As we've seen on other analysis, it should always be above 2, and 0 long-term debt. So healthy balance sheet, more at least for now. So on a quarterly, so the balance sheet has been eroding some of its quality, but still good, with the current ratio of 3. This is revenues. This probably explains why the stock was down over the years. Let's see here, in 97 they had almost 200 million in revenues, 191 million, and now just 14 million in 06. I don't know what happened to this company, but something bad indeed happened, because this is a big and nasty revenue decline. The gross margin has been around 50%. That's about the industry average. The industry average is 57%. The price to sales ratio is also about the industry average. So this suggests a fully valued stock, perhaps, but with with this revenue decline perhaps overvalued if you compare the industry growth and the company specific not growth, reduction in revenues. Perhaps it shouldn't trade at the same multiples, revenue multiples, as its industry. Let's move on. This is the quarterly revenue chart. I only go back to until 2004. We don't need more for a quarterly analysis. As we can see, the recent rally was due to this revenue jump. It jumped on the press release. It says it jumped to 100%, about that, more than 100% just this quarter. The problem is this was due to the company winning more patented infringement lawsuits, so it's not recurring revenues, and I'm afraid over the long term this won't be sustainable because the recurring revenues were just 1 million, not so 8 million of one-time items here. This reminds me of PTSC, that OTCBB traded stock. I really don't like this. Let's move on. Okay, net margin. Pretty erratic picture here. This is the earnings per share, so profit, loss, big loss, small profit, big loss, small profit, big loss, small loss, acceptable profit, big loss, loss in 06. So I don't see anything attractive here. One more. Okay, this is the quarterly earnings per share numbers. Here's that quarter. As we can see, the earnings per share on the first quarter 2007, it's this quarter, it was 0.11. So if you annualize this, you get 0.44 for the earnings per share, and that leads to a price to earnings ratio of 3.75, which seems extremely attractive. That's why the stock has been up so much. The problem is this isn't sustainable over a long-term period. It may happen that the next quarter will be a loss and the stock will collapse, of course. Moving on. Long-term estimates. No long-term visibility on the company's revenues or profits, or should I say losses. Impossible to predict the company's future. Fundamental overview. No worries about dilution. There hasn't been any over the last years, quarters, and the balance sheet is okay, at least for now. Revenues are falling on a long-term basis, just one quarter of a bit of growth. The problem is revenue in fiscal Q1 2007 doesn't look like recurring, so the company can go back to shrinking revenues and losses. This quarter doesn't mean much to me. General overview for FORG. Technical analysis, short-term bullish but medium long-term bearish. This means the stock the fundamental and technical analysis agree that this is a short-term thing moving the stock, but longer term it may go down to its previous lows, which were below $0.50. So be very careful with this. Fundamental analysis says the current rally is based on a one-time event, or just one quarter event. So my outlook on the stock is unfortunately negative. There can be some more room for upside, but I wouldn't bet on it. The risk is too high for me, for my taste. But good luck.